Hello there, Maverick Currency traders. Welcome to the weekend. This is Rob Reinhold. I'm joined by Ankit Sharma. This is the Currency Room, and we've got a great trading environment on our hand in currencies. Very excited about it, so let's jump into it. In this session, we're going to talk about what happened last week. We're going to take a look at some of the broad markets. Then we're going to drill down into individual stories. And as always, we throw everything away we thought on Friday, and we just look at the market how it is today. We score relative strength and weakness from +3 to -3, and then we pair up the strongest and the weakest for our trades for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
We finally saw a sell-off in equities. This has been the biggest sell-off since May. Actually, since April. We had a little one in late May, and then all of June, we either were going up or basing, or high basing. So the market is finally getting a pullback, and it's feeling all this pain, and it's just because it hasn't felt a pullback like this in a while. We did make new all-time highs in the S&P on Tuesday. So on Tuesday, the party was still going on. Here we are on Friday, and everyone's just down in the dumps because we had 3 days of a pullback. It's really not that big of a deal. We'll take a look at the charts. We did see the dollar strengthen. We did see bond yields climb up a little bit higher. That's not great for stocks, but it wasn't really that meaningful of a move. This was really just a trigger of people exiting the large cap tech stocks that we saw about 7 or 8 days ago. This is just a continuation of that. And then cryptos had a great week. So we had a great week higher in cryptos. We had a good week in Forex. Let's take a look at some of the stories for the week. Last week was all about CPIs across the world. We got Canadian CPI. This was kind of a mixed report. The headline numbers were less than expected, but the trim CPI was higher than expected. But ultimately, the CAD was weak. People are thinking that the Bank of Canada is likely to cut rates even a little bit more. We usually don't talk about retail sales, but I wanted to point this one out because I've been talking about this lately. That a slow U.S. economy is good news until it's bad news. So right now, the U.S. economy is slowing, and everyone has been really liking that because that means interest rates are going to come down, the Fed's going to cut. But at some point, too weak is a problem. And I was pointing at this retail sales report last week, said, hey, if this comes out really weak, it might be a problem for the market. You can see the retail sales is doing great in the U.S. That being said, we're still seeing a sell-off in U.S. equities. We had 2 CPI reports, Tuesday night, Wednesday morning. You could see New Zealand, less than expected. The Kiwi actually dropped initially on this, but recovered quite quickly. The UK, higher than expected inflation. I've been long the pound. I've loved the pound. We've been talking about the pound. This just gave the pound more strength to move higher. Then we had Aussie employment report, way better than expected. So the Australian dollar that was really looking bad, we'll take a look at the chart. The question is it going to bounce off this pullback? It's had a big pullback. This might propel it a little bit higher. And then the last thing I want to talk about is the ECB. The ECB came out and basically said that they are on hold for this meeting, but they started discussing rate cuts in the future. The market has been expecting 2 to 3 rate cuts from the ECB for the rest of this year. In that meeting, they were talking about only 1. That is actually a tightening of policy from what the market expected. So we'll take a look at the euro on a chart as well. We've liked the euro to the long side. It hasn't been our favorite, but we've definitely been more on the long side than short side. So let's take a look at the numbers across the board last week, and then we'll wrap that up and we will look forward. As far as equities go, down about 2% for the week. As I said earlier, new all-time highs on Tuesday, huge party. Next thing you know, we're down 2% for the week. Cryptos, massive bounce. We're going to take a look at this bounce. I am still not sold on cryptos. They've got to do a retracement and then break higher. And gold and oil down for the week as well. Let's take a look at this S&P chart. And our first line in the sand for support was this 20-period moving average. And you can see it broke. So the first support line, everything up here was just a pullback. It was just fine. And then once we broke the 20-day moving average, it told us, okay, it's going to be a little deeper. The next level is 5,500 on the S&P. And you can see that's literally where we are at the moment. That's where we are. If we can get a bounce on Monday of next week, then this will be a support level. And you will look back and say, okay, well, that was a pullback to that support. If we go below that, it's now starting to do some real technical damage. And the next area is going to be at the 50-day moving average, right around 54.20. Now at Maverick, we've got this as our line in the sand, above the 50-period moving average, bullish, below it, bearish. If we break through that 50-day moving average, we will switch to a more risk-off nature in our trades. But look, I'm just talking about all the possibilities that can happen. Here's what I've learned in my 27 years. Bull markets go up longer than you expect them to, and they keep going up and keep going up until they don't. So with that knowledge in mind, I'm looking at this. I am not going to try to call that this is the top of this bull market. Anyone who's tried to do that, they called it 3 months ago, 2 months ago. They got crushed. I'm not going to do that. I've done that in the past, 25 years ago, and guess what? The market rolled me over too. I'm not that bold anymore. There's a great saying in trading. There's old traders and bold traders, but there's no such thing as an old, bold trader. At this point, I still have to consider this is a bull market, but as it starts to break through certain levels, I can definitely start to get less bullish. We broke our first level of 20-day moving average, 5,500. If that doesn't hold, all of a sudden, now I can start ratcheting down my expectations of a bull market. But right here, right now, if we bounce next week, when we look back on this a month from now, it's just going to be another one of these little pullbacks. Here we had a little base. That's all it's going to be. We had great activity in the Forex market. Very excited about it. Swiss franc was the strongest. Now, we've talked about the Swiss franc and the yen being our favorite shorts for the last couple months. And we talked about how we really love that these are getting a bounce. But you can't short them yet until they've turned over. We'll take a look at all the charts. We'll see the ones that have turned over, which ones still have a little bit of room to go. The dollar found some real key support. We'll take a look at that on the charts. And we had Aussie Kiwi as the worst. This is a very, very classic risk-off distribution. Risk-off, meaning people are scared, so they run and hide in the safe currencies, consider these, and they flee the growth currencies, consider these three. Ankit, do you think there's anything more than just a risk-off move in the Forex market last week?
No, I think this, the entire move was more in line with what's happening in the broader markets. I mean, look, it's a Swiss franc strength. Again, it all came in the last 2-3 days. Everything was kind of one way. So it seems like the yen is the one that's adding on to the gains from last week. So that's something to look at. But Swiss franc really caught my surprise based on what we saw. And then also the dollar. I mean, dollar almost tested the bottom end of the range, and then it just rallied higher to 0.65%. So some big moves happened just because of that risk-off sentiment. And then we're seeing even the Aussie and Kiwi can't catch a break because that's where relative weakness is as far as the risk-off sentiment goes. So I think this board really fits the category of a risk-off sentiment in the markets.
Thanks, Ankit. And just to tie in what Ankit is saying is right now, there is a very high correlation between what equities do and what the Forex market does. Sometimes that correlation isn't there, and sometimes it is. Right now, the equities are driving the Forex market. So really, whatever happens to equities is most likely going to affect what happens in the Forex market. There's some times where that doesn't happen. And in fact, here we are at cryptos. Cryptos are also tied to the risk-on and risk-off moves of the market. crypto is considered a risk-on investment that people like to buy when stocks are rising and economic times are good, and they like to sell them when the market sells off. It did not have that correlation this week, and you can see the cryptos all ripped higher. I'm going to spend a lot of time on the crypto charts this week because I really want to make sure everyone is ready for a potential move and doesn't get suckered in too early. All right, let's go in and break down these markets. We already took a look at the S&P. Let's take a look at the bond market. Here's the US 10-year bond. We did break below the support line. We're back at it. Look, until we have a couple candles above this line, we still have to consider that the next move is likely going to be lower. That's just what the trend says. Once we made a new low here, we have to say it's making a new lower low. This is now an trend trend until proven wrong. At this point, we have not been proven wrong yet. In the crypto market, I was been very clear over the last week or two that with this crypto rally that we had, we went up and we made a new swing high, which is good. But I said, I'm not ready yet until we get a retracement and a breakout. So you could really just take a look at this line right here. You can see it is close. Until that breaks, I'm watching, but I am not going to be active in cryptos. This is the crypto basket, all of them put together equally weighted. We'll take a look and see which one is actually the best on relative strength and weakness. Next week, we have one central bank. We've got the Bank of Canada. They are expected to cut rates by 25 basis points. The Canadian dollar has been falling in anticipation of this. The big question is, are they going to signal more rate cuts after this? Other than that, the only thing I see is this core PCE price index in the US. We've seen inflation come down across the board. CPI, I can't say PPI, that went up, but really inflation is waning. The Fed likes to look at this core PCE price index very closely, but look, I'm going to go ahead and say that if this number is hot, if it comes out at 0.3, 0.4, I don't really think it changes the outlook of the Fed. I think the Fed is already determined that they're going to cut rates. I think they should do it in July, but the market thinks they're going to do it in September. I think they've already decided they're going to cut rates. I don't think one little data point is going to mess that up. So the odds of this being bad news for the markets, I think, is pretty low. If this comes in at 0.1, which a lot of the inflation numbers are smaller than expected, I could see this ignite a rally in stocks and have the dollar and the bonds fall. But there's not a lot of news this week compared to last week. So make sure that you are watching the news. If you have any currencies that have major news on them, definitely be watching them. But for a news week, this is a light week. Let's go ahead and go through all the currencies, score them one by one, +3 to -3. I'm going to take the cryptos. Ankh is going to take Forex. Let's jump into Bitcoin. We looked at the basket, and we saw that the basket wasn't quite there yet. But we look at Bitcoin, and you can see it's doing exactly what I said it had to do. All the way back here, I said, look, I'm not going to be a believer until it breaks to a new high, which it did, had a pullback, and then the buyers came back in, and it went above this last swing high. So for me, Bitcoin is tradable. It is tradable, so now I'm just looking at timing. It's on my radar as one of the trades I can take this week. All I'm looking for is timing, and we will get into the smaller time frame charts when we go through those individually. Bitcoin Cash, you can see, has not done it yet. It came up, really didn't even make a new high, hit to the same high, pulled back, and we have yet to break out above that level. So for me, Bitcoin Cash is not tradable. Ethereum had the rally, didn't really make a new high, pulled back, but look, it is really close there. Next week, they are likely to announce the Ethereum ETFs are going to be approved by the SEC. that led to a pretty big rally in Bitcoin. But look, they already had this news about 3 months ago on Ethereum, and it already had its rally all the way up to 4,000. I don't think we're going to get the same kind of rally because it is very, very highly expected. Remember, whenever something is expected, then it's already baked into the price. So when the news comes out, it's very typical to get a sell on the news because everyone already knew the news, everyone already bought because of it, and there was no one left to buy on the news. Here we are, Litecoin. You can see Litecoin is really problematic because we did not even make a new high, and this pullback and bounce is pretty pathetic, so not on the list. In the world of cryptos, I'm going to say early in the week, Bitcoin is the only thing that is tradable on my list. Ethereum, if we can go a little higher, I'll put that on my list as well. So for me, cryptos are starting off the week maybe as a possibility. Maybe on Wednesday, Thursday, it's going to be a little bit more clear. Ankit, take us through Forex. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader?
Absolutely. Let's begin with the good almighty US dollar. Well, I've talked about this before. When the moving average is flatline, this is a range of price action. And look at that bounce. I know we have this sell off in the market, but look at the technical side of it. It's just a bounce. So we are starting from the bottom end of the range, now almost towards the mid end of the range. I won't be surprised if we go back to the upper end of the range and then maybe just fails at that point. So I think that's really where you want to be. I know the trend score is kind of shifting from a -2 to a +2 pretty dramatically, but with this sideways range, I think we just got to stick with that sideways price action. So going into next week, I think you can push it a little bit higher as long as the market stays where the way it's performing today. If we get a bit of a relief rally in the markets, I won't be surprised that it just sort of dies down from here. So I think that's just what we have with the dollar, and not a whole lot of price action from a continuity basis that we're getting here. Now, if we go into other currencies, well, the yen is kind of looking interesting here. And I always look at the dollar yen, since, we had that most negative correlation there. But this thing is holding up there too. So the question really comes is that, should I go long the dollar? Should I go long the yen? And for the longest time, we haven't had where both goes up at around the same time consistently. So at this point, I want to just, look at this and wait for sort of a confirmation. If the yen has more rally to be had, then we need to see that breakout above it. But I can't deny the fact that we are seeing a nice improvement in the yen. So like Rob said earlier, I don't think this is ready to be shorted yet, even though in the past every rally was failed. We just don't have the confirmation yet. So the price momentum stays strong. And then if you take a look at the other defense currency like the Swiss franc, look at that rally there. So we were looking for a breakdown below that moving average. That's what we were preparing for. And here we are with the big rally. So one of the things we always look for after a big rally is what kind of, is it holding on to the gains or is it giving up the gains? And clearly it's holding on to the gains. So the momentum is there. Everything is lining up. So I don't want to be shorting the Swiss franc here. I mean, maybe look for a further breakout to the upside, but definitely a big change in that trend score going from a -2 to a +2. So we'll continue looking at that and make adjustment. Now, if you go into European currencies like the euro and the pound, well, euro definitely is looking better. I mean, take a look at euro from both the trend perspective, it's a +2, but then velocity as well. It's making a nice high base. So I like this high base. Breakout above it next week. That's what I'll be looking for. That goes on the top of the list. And then if I compare this to the pound, and I know Rob had a great long with the pound, and we've been on the cheering the pound for the last few weeks. I think it might be due for a bit of a pullback or profit taking. As we look at the chart, it seems like the euro is doing a little bit better than the pound. So I think maybe this is where the euro can play a bit of a catch up to the pound. So going into next week, I think I would rather go for the euro over the pound based on what I'm seeing in the price action. So slight correction in the pound here. Now, that's where we are in those European currencies. But now let's go into the growth currencies. So the Canadian dollar, which again gets more tied up to the US dollar, very similar price action. And it's a range of price action going above the upper and the lower end of the range. This one clearly is an underperformer because the USD is almost at the mid of the range. This is staying a lot lower. And I think this is likely to stay under pressure as we have the Bank of Canada rate cut going into next week. I don't want to be shorting this one until it really breaks that support. So this is just also another currency that's stuck in that range. But I don't love the price action. Look at the velocity; it's only a +1. So even with that bounce, even with that proxy, it's not really getting that biggest move. So I'd rather stick with the USD. But I really want to watch the Canadian, the Bank Canada rate statement because that's really going to drive that currency. If they come out rate cut and talk about more further rate cuts, I think now that makes Bank of Canada a lot more dovish than other central banks that are not as dovish. So interesting movements that we're getting in these central banks. Now, if we go into the Aussie, but what are we seeing in the Aussie? Well, we are seeing that change in the momentum. That was a big breakout that we had in late June. And I want to identify this turn that we are now below the 20 and above the 50. And this is where I always say you want to change when the market changes. That's that we got to make that adjustment. And I think as much as we were liking the Aussie to the upside, well, the trend is changing lower. So I think at this point, it's right up below that. The prior resistance is now the support. Based on the price action here, it might go sideways a little bit, but if it breaks lower, I want to take advantage of that opportunity. I want to take advantage of those reversal points that we're getting in some of these currencies. And even if you take a look at Kiwi had a very similar pattern. Kiwi was stronger and it did pull back, and after that, you can see whenever it just pulled back, it just started to go lower. So there's a relative weakness there. So between the Aussie and the Kiwi, they can take turns. For the last few days, I think the Aussie is doing a little bit better than the Kiwi, but Kiwi is the worst one. But that could change too, and maybe next week Aussie can take a bit of a negative turn. So you can always need to make sure you're looking at the Aussie Kiwi pairing to see which one is performing better and the worst. Same thing with the euro and pound. Take a look at those pairings, and then based on that, pick those. So that's what we have, Rob.
And Angad, I will absolutely agree with you that for the first time, again, I've been very, very bullish on the pound. I think you're right. I think the euro is the one I'm going to focus on this week. It's showing some more strength. It's high basing. It looks like it's the currency that wants to go higher. Look, the yen and Swiss franc also want to go higher. The problem is they're still in some longer term downtrends. So I just don't love to trade things that are in longer term downtrends that are having these big rallies. They're relief rallies. If you watch this in the stock market, it happens all the time when stocks with really bad news, they'll just fall and fall and fall. And then for about a week, they'll have a 20% rally. And then what do? They fall apart after that and keep going lower and lower. That doesn't happen the same in currencies, but we still do have some long-term downtrends. So look, if I was a reversal trader or something like that, I would be long Swiss franc and yen with a very short leash on it. But I'm a trend trader, so euro is number one. CAD and Kiwi both look weak. Agree with you there. And if we take a look at velocity score, remember trend score is kind of longer term, what we see happening. Velocity score is what's moving right here, right now. Well, dollar. Dollar has the most momentum to the upside. Bitcoin has got some momentum going. So if you're looking at something like first thing next week, this is probably the place to look. I am looking for euro, which is at a +1. So the euro has to move for me in order to get into it. So I'm not going to expect to jump in this one Sunday or Monday. This one's probably going to be something I enter in during the week as the euro proves that it can go higher. Kiwi to me is the clear short out there. It's very, very clear. The CAD is basing here at the moment or having a little bounce. Kiwi is weak. I think this is where we have to focus. So first of the week, I'm going to focus on Kiwi dollar and Bitcoin. Later in the week, I want to take a look at euro against some of the weak currencies. So first off, let's take a look at this Kiwi dollar. And here's the daily chart. And you can see we've got some pretty good support that we have broken here. Big question is, where is our next support? Boy, it is not very close. Maybe somewhere in here, somewhere in this range is really our next support. You can see we've got a lot of downside left to support. That being said, whenever I see a big fat red candle like this where they were just selling, it's telling me that there's a lot of momentum to the downside. The more momentum there is to the downside, the quicker and sharper the bounce backs can be. So for me, I would love to see a little rally. Love to see a little rally, just take a little bit of the pressure off, take us right up into this 60-40 area. Boy, that would be great. So somewhere in the 60-30 to 60-40 area, let that thing come up, make it turn down. I think you can make a great trade here on Kiwi dollar, but I'm very hesitant to just blindly chase things that are just, either taking off or falling down. If I do it, then you have to do some pyramiding. Take a third of a position and wait. And then take the other 2/3 down the road. This one to me looks the best at the first of the week. And then let me take a look at Bitcoin and let's get some specific numbers on this. Bitcoin is the only crypto to me that looks tradable. And you can see we're breaking out here. We're breaking out. So right here, 66,100. What's that? 66.6. Could you get in right here, right now? Yeah. I mean, everything is lining up. Daily chart is looking good. RSI is turning up. Parabolic SAR is turning up. EMA is turned up. Everything is telling us is going higher. It doesn't mean it's going to. We've all been trading long enough to know that even though we have all the green lights, it could fail. That's why we have our position management. But to me, Bitcoin looks good here. Stop placement, maybe all the way down here to 63,170, right around in here. That's going to give you a pretty wide range here. So that's about $3,000 here, 3,000 points at Bitcoin for a pullback. If you want to be a little tighter, then maybe you use a 13 EMA or something like that. Those are the two I wanted to take a look at. Ankit, what do you want to take a look at?
Hey, Rob, from a technical standpoint, I like the Aussie USD a little better here, and I'll show you why. I mean, if you take a look at the daily chart, you can see that this was a huge breaking out point from the prior resistance, which became a support. You can see that it kind of clearly gave up that support. So whenever I see that, now I'm just aiming for the bottom end of the range. And I think that's really where this one is. I would love to see this sort of point out or maybe have some sort of a base here and then just keep falling lower. But yeah, this one I find interesting. And again, looking at the Aussie and US Kiwi, I think if the Kiwi takes a little pause here, I think Aussie can really take that lead, similar to what we are looking at between the euro and the pound. I think I'm looking at between the Aussie and the Kiwi as well. So Aussie dollar is the first one on my list. I love it on a 4-hour chart. We are on the use the exponential moving average as a guiding stop, and just looking for that momentum to sort of continue going lower to the bottom end of the range. So again, this is the one that really stand out to me, and I can also take a look at Euro Aussie as well. Similar to the same setup, I like this further to the upside as well. You can see beautiful base sort of forming here, and the daily chart, you can see this has a room to run. Similar to what we saw with pound crosses, they had a massive run. If the euro basket is actually running, is breaking out, I think we can kind of do the same thing with some of this euro crosses as well, just paying attention to the relative strength of weakness. So these are the two that goes in the top of the list here on my list here, and then we'll evaluate next week with the news events, and especially with the Bank Canada, we'll trade accordingly. Back to you.
I think we're in line for another good trading week. I've been very surprised. After being pretty negative in May, if you remember all the way back in May and early June, I was pretty pessimistic about the trading activity in the Forex market. And I just said, hey, look, everyone, trade the market in front of you. It's not a good market right now. Go either take a break, take half positions, do something, because it's just not good. Everything is cyclical in the markets. Things that aren't good, they're going to get great. we're in a really good trading environment right now. So I think now you want to be pushing trades. You want to be more active. You want to be taking more trades in this situation because we are getting really good tradable moves. The equities are likely to stay under pressure until they're not. Now, I know that sounds silly because that's not even a call. Of course, everyone could say that. But what I mean by that is that right now, everyone's on their back foot. There's some panic out there. And what happens is at some point, everyone who is going to sell has sold. And then what happens is the market bounces, and then everyone who's been waiting for a market bounce, they pile in, and it simply very quickly goes the other way. We have to be nimble here as Forex traders. As this market falls, then we like dollar, even yen and the Swiss franc are going to be probably moving higher. Once we get a bounce, though, we have to shift. We have to shift very quickly, especially away from the yen and the Swiss franc. They're the most sensitive to equities at this moment. And then we have to find out, okay, well, what do we want to buy against those? But we're not there yet. We're falling, so we want to stick with what's working. Short Aussie, short Kiwi, short all the risk-off stuff, and be long the safety currencies. Watch out for that Bank of Canada meeting on Wednesday. Again, they're expected for a cut, but what do they say after is the big deal. Everyone have a great weekend. Take care. Goodbye, everyone.